Hello, my name is Stacey Mankoff. I'm the managing principal of the Mankoff Company and founder of After the Bell events. And I'd like to welcome you to our latest edition of the Bellringer, which, as you know, we're doing these one-on-one interviews as our After the Bell events are on pause, but we are hoping to bring them back in the fall of 2021. Today's talk is going to be on applying AI to finance, why, how, and when. And I am delighted to welcome Irene Aldridge to this talk. Irene is an internationally recognized quantitative and big data finance researcher, an adjunct professor at Cornell University, and president and managing director of research of AbleMarkets, a big data for capital markets company. Prior to AbleMarkets, Irene designed and ran high-frequency trading strategies in a $20 million cross-asset portfolio. Most recently, she is the co-author of Big Data Science in Finance, and I'd like to welcome Irene.
Thank you so much, Stacey. And it's a pleasure to be here and speaking with you. And thank you so much to everyone who's watching and tuning in. And I just want to say a few things about Stacey because she is the mega star of this operation. She's been doing conferences, organizing very professional events for a long time. And she is an expert now in all these topics as well, because she's involved in this in such detail and has spoken basically with everybody on the street, I think. So it's a great pleasure to be here. And I really appreciate being and speaking about this.
Thank you. I always laugh because when I was first doing the Bitcoin conferences about 9 years ago, I got paid in Bitcoin, but I converted it all to dollars.
Oh.
And I thought about that recent sushi dinner that person now, is a $200,000 sushi dinner because they kept the Bitcoins. But anyway, lesson learned. Anyway, the first thing I'd like to ask you is, what do you mean by AI in finance, and how would you apply it?
Sure. So in general, AI is referred to anything that's basically a computer system or a computer system that can function in an autonomous fashion. So it can collect and process the information around it, and then it can make decisions and act based on those decisions. So when we think about AI, most often we think about cyborgs and scary movies, basically the machines that just go around and shoot people. But there are a lot more examples that don't look anything like that. So, for example, there are now AI machines that can scan your skin and identify accurately whether you have any defects in terms of, do you have any cancer propensities or anything along those lines. Mm-hmm. And I mean, it's just a very kind of simplistic application in a larger AI picture, right? So what we're looking into is machines that are really able to collect the data, like self-driving cars is another great application of AI. So it's something that explores the universe around it, and it's analyzes the situation, and then it makes decisions, driving decisions. So in the context of finance, that of course means automated investment management, risk management, or other like trading functions, like actually processing flow. Mm-hmm. And so what it means is in finance, the machines collect information, and then they process this information. And there's a lot of sophistication that's involved in building the algorithms for doing so, of course. But then they trade on these decisions. Mm-hmm. So it sounds like high frequency trading, but it doesn't have to be high frequency at all. Mm-hmm. So as we show in our book, there's plenty of opportunities where you can do that on a monthly basis very successfully. So your machine only runs once in like at the end of the month, and it produces the output that then just like turns over the flow or whatever. And the interesting thing, you can apply to any asset classes. You can apply to foreign exchange, to crypto, to equities, commodities, options, of course. The possibilities are really limitless. Also, with this new technology, you can do it all very, very fast. And it's going to have impacts not just on trading or investments, but also on risk management. I think especially in risk management. Traditionally, risk management has always been locked into these giant Monte Carlo processes. And these Monte Carlo processes, it's basically a simulation that simulates all the possible outcomes. And then from there, people would select the worst perhaps outcomes and boil them down into their risk management system to basically mitigate for those extreme risks. So with the big data processes, you can now do Monte Carlo really, really fast. You don't really need at all any kind of delay or anything along those lines in doing so. So I think there's a huge possibility for all of this.
So is that the major reason why you would use AI, is for speed?
Not necessarily. So I think there are many intelligent decisions that you can make with AI. So for example, let's say you have a star analyst, okay, and the star analyst can only process so many data points per day. So for example, if this is an equity research analyst, he can probably read, well, maybe if he's extremely good and can work extremely fast, he can probably deliver a quality reading of, I don't know, maybe 30 or 40 articles per day, right? Besides, you just get tired. It's hard to read more.
We're human.
Yeah. So because of this limitation, most equity analysts, they usually take about 2 weeks to process and write a quality report about some equity, upcoming equity, movements or something, like analyze a stock of a particular company or something like that. So what you can do with AI, you can create a system that basically observes the inputs and outputs of this analyst and then expands them to other equity symbols, for example. So you're kind of replicating the person's brain in this respect. So you don't, you still need a star analyst for this to work, because you basically are mimicking their behavior. And this is called semi-supervised learning. It's also covered in our book.
Okay, is that what you would also call a hybrid application, where you use both human and AI together?
I think so. I think it's a perfect example of a hybrid application, which allows you to improve your productivity dramatically, because now you, instead of just basically relying on one person, you can really take this person's judgment and abilities and expand them to a wider range of basically coverage, without sacrificing necessarily the quality of the opinion, right? So
Right. But do you, I'm going to take a devil's advocate
sure.
position, but won't this eliminate a number of jobs with the application?
Yeah, so there's definitely a risk that a lot of jobs will go away, because these systems, they require one star analyst. If you have not so star analysts, it's not clear that you really need them in this particular context. But the good news is, and a lot of people are concerned about job elimination.
I would think that would be the biggest pushback you might get on applying this.
Sure. So the good news is there's actually been a lot of economic thought, not mine, on what happens when the new technological developments are implemented, and it's called what's called a Jevons paradox. And what it says is basically, the easier it is to use something, the more automated there is something to use, the more people use it, and the more jobs are created as a result. So like, take for example things like email. People thought that it would absolutely destroy the post office. And in fact, the post office was internet, not just email, but internet. And in fact, the post office was going bankrupt. Remember, like about 10, 15 years ago, there was a big concern. And then out of internet, we now have Amazon that, just sends everything via United States Post Office. So they're prospering. I haven't heard about the post office going bankrupt in a long time. And
no, but the current administration would like to privatize it, but that's a whole other story there.
Yeah, well, we'll see what happens. But yeah, it's a different. But the same thing about paper, right? So people were very concerned that paper mills were going out of business because of the internet again, right? Because the technology was such that everybody was sending email. and nobody was going to write letters anymore. So what happened instead is because people just started printing all the emails, and they now use more paper than they've ever used before.
Right.
And it's really, nothing like this has happened. So I think there are always changes in how when new technology is adopted.
Right.
But I
Wouldn't
think
you, yes,
yeah.
I'm sorry to interrupt.
No,
But
go ahead.
wouldn't you say also when, high frequency trading came in, and there you had, I mean, there is no more, pit in Chicago or
Yeah.
screaming trade, as much screaming traders at the I mean, the stock exchange is
Yes.
basically, it's totally different.
Right.
Um,
Sure.
so is it more like that sort of development?
Right. Well, I mean,
An
high frequency.
inevitable development, I almost want to say.
Well, I think it is. I mean, I think there will be a lot of people who are not prepared for AI or like big data revolution, and I think it is a revolution. It's not an evolution. It's definitely a revolution in
Hmm.
the way people think about data and what they do with it. And I think that they're going to be at a disadvantage. So if you're watching this and you're not thinking about big data or how it's going to affect your life, you have to change. You have to start thinking about it. So because it's definitely something that's coming in a big way. And I mean,
Mhm.
it's not new to other industries. I mean, it's very new still to finance, although Goldman Sachs has created their data lake, and they
Mhm.
made a strategic decision about 5 years ago, probably, to really shift all their operations in a data kind of centric environment. But like Google already made their $1 billion on big data back in the 90s,
Mhm.
so and it's all completely big data algorithms that they've been using. So and a lot of innovation in terms of big data is coming from social media companies, because they're working on it continuously every day. So there's a lot of stuff that's already developed, which is
Mhm.
great, because you don't have to really create it from scratch, but you need to create applications. And
Right.
those
And
applications.
that's one thing I wanted to ask you about
Yeah.
also. When you're talking about, AI and, things, how do you handle when an unexpected event comes in, especially in the financial markets? I mean, like COVID, like a terrorist attack, like something like that, where boom, it's
Sure.
really hit. Where is it nimble enough to react to some, out of the ordinary event that a human could adjust, and will an AI application be able to adjust to that as well?
Sure. Yes, that's a great question. And here you have complete flexibility on what kind of data you use. And
Mhm.
of course, the more data you use, the better. And also what kind of time period you take into account. So I would say that the reason why the market suffered so much as a result of COVID is really because people are relying on these traditional, like 10-day VAR risk management systems that are not taking into account the more current events. But even so, and with big data, you can be very nimble and very flexible and take into account like immediately what's happening. So avoid these problems. But even without that, so we track all the information we can possibly find, and we process it. And so even back in January, COVID was coming up as one of the top negative items on the list there, as far as equity
Influence.
markets are concerned in
Mhm.
the US. So if you had this insight way back then, and it seemed like a few people did, because the markets have been selling off like since January,
The
kind of
market's been
steadily.
doing very well.
Yes, now
And there
definitely.
seems to be a disconnect, with the economy and the markets, but the markets are doing well. But when
Right.
with something like COVID, they know, but let's say, you have like like a quick thing, like, where, there's a stimulus package that's supposed to be coming through and everybody was betting on it. And then all of a sudden, the president changes his mind and not. So it's
Right.
like within a four and then goes back.
Sure.
Um, but still that, I'm talking, COVID was almost like a long thing. Brexit, they're aware of that, but like the instantaneous ones, or even like, especially if you're dealing with foreign exchange or commodities or something like that, and there's like a fire or something that ruins a crop or whatever, will
Right.
AI be able to handle those type of things as well?
I think absolutely yes, and I think even to the point where there is an opinion out there is that the only reason Twitter is in business, meaning the only reason they're able to pay their employees, is because hedge funds are buying their data. Like they have absolutely no other.
Oh, that's
No,
interesting.
yes. So and there, I mean, there are issues with Twitter. It's very noisy. It's but things like you mentioned. I mean, I think one of the great things that former President Trump did is the fact that he used Twitter was really helpful to the markets, because under the traditional news distribution system, like the news is distributed to select few journalists and then it's embargoed like for 2 hours, right?
Mhm.
And the reason why these embargoes were in place in the first, or still are in place, or when they were implemented, is to give journalists really the time to tell the story, and in 2 hours it's widely distributed to everybody else.
Mhm.
But the news, the distribution system is completely outdated, because like way back when this embargo was created, you could not do anything in the markets in 2 hours, like
Mhm.
because they're such long processes. Sometimes it took 3 days to execute a trade.
Mhm.
Now today, any journalist with either can sell his embargoed information to a hedge fund,
Mhm.
and there are no penalties for that, by the way, still, or they can just trade them themselves, before everybody else. And I don't think this is an advantage. Like it's really, I think it's interesting to see how many people after Trump's lead are really taking onto Twitter. Like you have Steve Cohen now tweeting all the time about everything from his baseball team,
Right.
to everything. I think I find it fascinating to watch like this really real time interaction that
Mhm.
with these people who are previously were completely inaccessible to
Mhm.
most, right? So
Mhm.
and it's now completely something everybody does.
Right.
So I think there is AI enables you to take all this information that's out there that people are posting and
Mhm.
process it in an intelligent way.
Well, I
And
think
so
yeah.
yeah,
No, I think that's great. And I want you just, because this is sort of a brief conversation,
sure, sure,
I want people to get a taste, because we
sure.
will develop these topics into future um, in real IRL panel discussions, not
Yeah.
AI, but in real life. And so, to wrap this sort of up, where do you see AI in applications in finance in the next 5 years, 10 years? Give us a future perspective.
Well, I personally think it's a lot of things are going to get automated. So what we've seen, I view it as fintech 3.0, if you'd like. So with
Mhm.
fintech 1.0 was Bloomberg, when he developed an ability for large corporations to bring computer technology in house, which was very expensive, and really via leasing, right? Enable that. And computer technology, or fintech 2.0, was when during the dot-com boom, everything got automated, like everything got globalized, everything went online, so you could
Mhm.
transfer your books, and also a lot of back office just got automated as a result
Mhm.
with computer technology. And now you're really getting into more sophisticated play, right? So more sophisticated pricing of all the instruments. And there are now a lot more instruments and a lot more data, because we now have like 60 trading venues
Mhm.
just in equities, as opposed to, and just in the US, as opposed to like 3 when we started. I don't know, but there was only one NYSE for a long
Mhm.
time, right? So there's a lot more information that's coming from all the different sources. And I think AI enables us to process this information in a way that really no human even can do
Mhm.
that,
Mhm.
because there's just too much stuff to think about. And so computers help us bring insights together from all these obscure corners of the universe, including, as you mentioned, if there's a fire somewhere, we can look on satellite imagery and process satellite imagery in real life as well. We also now have 5G coming online, which will enable all
Mhm.
sorts of devices stream in real time all kind of information. And it's really like if somebody checks in from the pharmacy and buys 100 bars of soap, it may have impact on the price of Unilever, for example, or this another soap making company. So it's and all of this is just coming online, and it's becoming much so basically I expect the markets to change quite a bit. So I think there's a real opportunity in the next 5 years to make a gold mine
Okay.
in this field. But I think 10 years from now the world is gonna be very different.
I'm sure it will be.
It's gonna be
I'm sure it will be.
very automated.
Hopefully a healthier and safer world. Too,
yes, health, definitely.
Anyway, Irene, thank you so much for
Thank
taking
you, Stacey.
time
I really
with us.
appreciate it.
I really enjoyed it, and I look forward to, again, to seeing you in real life soon.
Thank you. My pleasure. Thank you so much.
Okay, bye-bye.